Okay. Good afternoon, good morning, wherever you are joining us from. We appreciate you being here today. We're going to be discussing the basics of down payment assistance programs. We're going to be talking about what they have in common, how they're different, and what everyone here needs to know to start conversations about down payment assistance without necessarily being a program expert. My name's Will Medina, part of our DPR team. We also have some other great team members with us here today. They will be answering questions in the background, so I ask that you please engage with them using the Zoom Q&A feature as we roll through this webinar. We love the questions, and that's a great place to put them. We're obviously looking at the chat, but the Q&A feature is much easier. And just a quick note, today's recording of the webinar will be shared with everyone. So we always like to start with a quick bio. Down payment resource was launched in 2008 to solve a problem that drove a lot of people in real estate and mortgage lending crazy. There was no easy way to find and track homebuyer programs. So DPR stepped in and developed an easier way to connect eligible borrowers with hard to find resources such as down payment assistance programs, grants, mortgage credit certificates, and other forms of homebuyer assistance. We proudly provide tools and down payment assistance program information for real estate agents, loan officers, and ultimately consumers to help all of you find and understand the down payment solutions out there for your buyers. We're here to help you connect home buyers to the down payment help they need. So, as mentioned today, we'll be discussing the basics of loans, grants, tax credits, and other programs that can help eligible buyers achieve the down payment faster, help with covering closing costs, and get them into a home sooner than they would have otherwise. So, let's take a look at the current state of homebuyer assistance programs. Of all the homebuyer programs out there, 74% are some sort of down payment or closing cost assistance. Now, that's really a catch-all category, and we will dig deeper in a few minutes, but it's important to know that not all DPAs are the same. 80% have deferred payments, meaning you don't have a monthly payment on the DPA loan for some period of time. 54% are forgivable, either in part or in full, essentially becoming a grant over a period of time. And 52% are both deferred and forgivable. What's not to love? And then there are still other DPAs that are true grants at closing or are repayable monthly after closing. As I mentioned, we'll be breaking these down further, as well as tackling the affordable first mortgages and tax credits, or as they're also known, mortgage credit certificates. So we always get asked, DPR, where are these programs located? And we always say these programs are everywhere. Some markets, of course, have more homebuyer programs than others, but there's a state housing finance agency in every state, and their programs are available statewide. So there's literally no county or market in the country where there isn't at least some kind of DPA or other form of homebuyer assistance. Now, who funds and administers these wonderful programs? As I just mentioned, every state has at least one housing finance agency. There are city and county governments, which often have community or economic development departments or housing authorities. We have a number of nonprofits, such as NeighborWorks or Neighborhood Housing Services and others, that operate in markets across the country and have varying programs. Many employers, such as municipal governments, hospitals, universities, may also offer their employees down payment assistance. And let's not forget that there are community action agencies, community land trusts, and so many other organizations out there that are all trying to open new doors to homeownership and promote housing growth and responsibility in their market, which is your market. And they've all got funded and available down payment assistance programs. So let's take stock of current trends here. Demand for down payment assistance remains through the roof. Providers at every level are continuing to increase assistance amounts, income limits, and purchase price limits to help more buyers in today's ever changing market. There are new state and local programs which continue to launch in markets across the country. And we found that 81% of all DPAs are funded and available. We continue to see much more attention on affordability and down payment assistance now than in many years. So it is safe to say that these programs are still available and are not going away. In fact, our recent Q4 2024 homeownership program index report showed a 1% increase over the previous quarter and a 7% year over year increase, raising the total number of programs offered to just north of 2,400. And as mentioned, more programs are continuing to come to markets all over the country, which offers you more opportunities to help new buyers. Within that same report, we also tracked growth in homebuyer assistance programs that helped expand inventory options for homebuyers, which included support for manufactured housing and 2 to 4 unit properties, but as we know, so long as one of those units is owner occupied. And what we noticed is that year over year changes included a 14% increase in programs that allow for manufactured housing and a 17% increase in programs that allow for multifamily properties. We also reported on year over year gains across different program types. So we were looking at grant programs, combined assistance programs, or below market rate and resale restricted programs. Now, all of these programs share some basic universal requirements. For example, they are only for owner occupant buyers. These are not for vacation homes or investment properties, although in some markets, the assistance may be available to buyers of 2 to 4 unit properties as long as the buyer occupies one of the units. They also require some minimal investment from the buyer to keep a little skin in the game, as they say. This investment can take the form of a monetary investment, which can range from 500 to 1,000 or perhaps more. The buyers are also investing time. It's important to remember that. For example, by completing their homebuyer education requirement, which buyers typically complete a homebuyer education course to qualify for a down payment assistance program. And of course, these are not cash buyers. We are referencing buyers financing their home with a mortgage, so they have to qualify for a mortgage as well. Now, with those universal requirements in mind, I'd like to take a look at the three most common types of homebuyer programs and what's unique about each of them. Now, the three most common types of homebuyer assistance programs are the down payment assistance program, the affordable first mortgage, and mortgage credit certificates. There are variations and certainly many other names for each type of program, and that's what we'll clarify as we learn how each one works. And remember that as we go, no two programs are exactly the same, but we're going to learn the basics of each type so you can understand at a glance what your options are. So I'd like to begin with down payment assistance programs. Down payment assistance programs are by far the most common type of homebuyer assistance in most cities. Every state has a housing finance agency, which is the housing division of their state government, and just about all of them have some form of a down payment assistance program, as well as local government and nonprofit program providers who offer DPAs. These programs are typically grants or silent seconds that offer down payment assistance of several thousand to tens of thousands of dollars to eligible buyers for down payment help. So if you look to the right of the graph, from top to bottom, grants, gifts that do not have to be repaid, repayable seconds, funds provided at closing that may or may not accrue interest, and the loan could range from 5 to 30 years with varying repayment terms. We have deferred or silent seconds where repayment of the original amount is postponed until one of several events occurs, commonly when the borrower sells, refinances, or there's a change in occupancy. And lastly, forgivable seconds where some or all of the original down payment assistance is forgiven. Often, a percentage of the loan is forgiven each year for a predefined number of years. For example, it's common for a forgivable DPA to be forgiven, let's say, 20% per year over the course of 5 years. And often, down payment assistance programs also allow the funds to be used for closing costs, prepaid expenses, rehab, or repairs, which can be particularly important to enhance a property or accommodate livability standards for disabled buyers, and even loan principal reductions. All of these uses help the buyer shed the costs of purchasing and financing a new home. And we're even seeing more programs allow their funds to be used for temporary or permanent interest rate buy downs. One of the most common misconceptions about down payment programs is that buyers must be first time buyers. Now, in fact, there are over 2,400 programs, as mentioned, across the country maintained in down payment resource, and 40% of them have no first time home buyer requirement. Beyond that, most programs adhere to HUD's definition of a first-time home buyer, which effectively states that you're a first-time home buyer if you haven't owned a home in the last 3 years, with still more exceptions to that rule for widows, divorcees, displaced homemakers, and other circumstances. But in just about every market across the country, we see programs that waive the first-time homebuyer requirement in targeted areas, that make exceptions for veterans or certain professions, or that just don't have the requirement at all. Now, while down payment assistance comes in many forms, they all help the buyer reduce the down payment burden. They help open new doors to homeownership and help with pocketing a little extra cash up front and along the way for other homeownership obligations. Many of these programs, as mentioned, are grants, meaning they are interest free, payment free gifts to buyers who meet the eligibility requirements. Others, of course, may bear interest, but defer the payments for the life of the loan until sale, or even better, until the affordability period expires. So, for example, some programs stipulate that the buyer occupy the property for a certain number of years. That varies, but may range from 3 to 10. And then the lien is forgiven, essentially becoming a grant. For those programs that are not grants, many will take second or third lien position to allow for layering of additional assistance programs. So, what are the eligibility requirements for these programs? We found that most have the following limits. Eligibility depends on the program and the funding sources. Income and purchase price limits are always market adjusted, often based on calculation for the area median income, AMI. But basically, they all have income limits ranging from 80% all the way up to 140% of the area median income, and sometimes even higher, which we found can creep into six-figure incomes in many cities. They typically have sales price limits too, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. The location of the property is also critical, as each program, especially at the city or county level, offers assistance within specific boundaries, such as city or county limits. But it's important to remember that programs from your state housing finance agency offer assistance statewide, essentially covering your entire market. We even have some nationally available programs integrated into down payment resource. Some programs have more needs-based eligibility criteria that involve an evaluation of each buyer's scenario and assistance needs by the program administrator. Most programs will mirror first mortgage requirements, as an example, requiring a FICO score of 620 or higher. Homeownership history also makes a big difference. Many programs are only for first-time home buyers, but there are many for repeat buyers or even current owners too. And once again, it's important to remember that a first-time home buyer is simply someone who hasn't owned in the last 3 years. Now, I'll expand on eligibility as it pertains to military service and certain professions in a few moments, but both can open new doors to assistance that may not be available to the general public. Ultimately, these programs reduce the buying costs for a buyer and expedite their timeline by offering down payment or closing cost help that enables a buyer to reduce their out of pocket expenses and retain their liquid savings. So, as an example, think about someone obtaining FHA financing where they're putting 3.5% down. If a DPA program helps them bring more to the table and instead qualify for a conventional loan at 5% down, this effectively lowers the monthly payments and the long-term financing cost. Specifically, an FHA mortgage has expensive upfront mortgage insurance premiums and higher monthly mortgage insurance costs that last the life of the loan, whereas conventional mortgages have no upfront mortgage insurance premium and lower monthly insurance premiums that can be canceled once the buyer gets to 80% loan to value. So when you reduce loan to value, you also lower debt to income ratios, which help more buyers qualify and increase their homeownership possibilities. Most importantly, it increases the purchasing power of a buyer's income, allowing them to more readily qualify for the home they like, and in some cases, qualify for a little extra home to suit their family needs. Of course, reducing monthly payments also allows for a little extra cash every month to be put right back into savings, which has been shown to improve default rates. Many down payment assistance programs require the buyer complete a home buyer education course, which provides valuable information about the home buying process and the resulting responsibilities of homeownership down the road. This better prepares potential buyers for the obligations they face as owners and the steps they'll have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. More and more, down payment providers are offering online education options for their homebuyer courses. Course material is typically in line with HUD certified homebuyer education. So most courses are simply an 8-hour class that can be completed on a Saturday or during a few evenings of online sessions at the consumer's discretion. This allows buyers to work ahead towards down payment assistance pre-approval and hit the market as more competitive and informed shoppers. Most importantly, these buyers are far more likely, according to HUD and the Harvard Joint Center for Housing Studies, to be successful owners down the road. Default rates are significantly lower when homebuyer education is completed before closing. So now let's take a look at another of the most common homebuyer programs, the Affordable First Mortgage. Affordable first mortgages are additional mortgage options typically only available through a state or local housing finance agency. The most common benefits you'll see are below market interest rates, reduced mortgage insurance costs, and allowances for higher loan to value. For example, Fannie Mae's HFA Preferred and Freddie Mac's HFA Advantage offer reduced mortgage insurance below a standard conventional product, all with a higher LTV. And you can typically combine these affordable first mortgage products with down payment assistance and or tax credits from those housing finance agencies. Affordable first mortgages also help further reduce the cost of homeownership for new buyers. Lowering monthly payments through lower rates or mortgage insurance pricing helps increase the purchasing power of each buyer and can potentially expedite homeownership for them, getting them into a home sooner than they would have otherwise been able to. Now let's look at the third of the most common homebuyer programs, the mortgage credit certificate. The mortgage credit certificate, or MCC, is available from state and local housing finance agencies in some states. Not every state offers an MCC, but if there's one in your market, we ask that you take a look. They are a great benefit for home buyers. This offers a federal income tax credit of up to $2,000 per year. Eligible buyers must get an MCC prior to closing and then get to use it every year for the life of their mortgage. The MCC tax credit helps offset part of your mortgage interest costs, and you still get to deduct the rest of the mortgage interest you paid each year. MCCs help reduce a buyer's federal income tax liability by offering a credit for mortgage interest paid. Some MCC providers will allow a lender to take the MCC credit amount and annualize that over a year to increase a buyer's qualifying income. And some MCC providers will also reissue an MCC through a future refinance. So let's take a look at an example of how mortgage credit certificates work. Let's take a $200,000 home. The buyer closes and makes 12 payments in the year. They paid 4% interest, so $8,000 in interest in that year. The MCC allows you to claim 25% of the mortgage interest paid as a tax credit, so $2,000 with respect to this example. But the homeowner still gets to claim the rest of the $6,000 of mortgage interest paid as a tax deduction every year. Here we have a recent case study in collaboration with Loan Depot. It details the success originator Mosey Gatling has herself had with engaging partners to explore affordable mortgage solutions for home buyers. The visual is regarding layering two Nevada Rural Housing Authority programs, down payment assistance program and a mortgage credit certificate, of course, if conditions permit. The example depicts the potential savings when exploring affordable mortgage solutions for home buyers. So I would like to wrap up this breakdown of the most common homebuyer programs with a few other scenarios where there may be additional or even unique benefits for your clients. There are many programs that offer additional or unique incentives to buyers purchasing in targeted areas, which means these are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town most in need of community investment. Typically, there will be no first-time homebuyer requirement. The assistance amount is increased, and the income limits and sales price limits are often higher. The idea here is to promote homeownership in revitalization areas, particularly so that core service providers and professionals can live where they work. Now, these targeted areas are all over the map, not just in big cities. Targeted areas are usually bounded by specific cities, zip codes, census tracts, or maybe sometimes entire counties. There are also special programs available in many markets that target certain professions, typically teachers and educators, police officers, firefighters, healthcare workers, and even municipal employees. As an example, in Georgia, the state funds the Georgia Dream program that offers $10,000 in down payment assistance to eligible buyers. But teachers, police officers, and nurses can get an additional 2,500 for a total of $12,500 in down payment and closing cost assistance. The idea behind these programs is to enable homeownership among local core service providers. And many of these programs have very broad definitions of terms like educator to include not just classroom teachers, but public school system employees at large, like paraprofessionals, librarians, school nurses, or protectors could include police officers, sheriff's deputies, corrections and probation officers, and more. Another targeted audience of eligible buyers is our armed forces active duty personnel and veterans. There are so many programs out there that waive the first time homebuyer requirement for veterans. Some even offer higher assistance amounts too. Many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little more flexibility to become buyers despite their homeownership history. Some of these programs offer the same or similar incentives to active military and Guard or reserves members. So I understand that we've given you a lot of information today, but we want you to know how to access all of these DPA programs once we leave the webinar. So I'll show you a number of ways you can access DPA info and start to enhance your marketing. Anyone can go to downpaymentresource.com, run an eligibility search for free anywhere in the country to see what's out there for you or your client. If you're an MLS partner with Down Payment Resource, we identify eligible listings in your MLS and match them to all available home buyer assistance programs. And we provide these matching tools in your MLS agent and client portal listing reports. You also get Down Payment Connect for free through these MLS partners. So we ask that you check out DPR, let your clients know what's available, and talk to your lending partners about which programs they may offer. And please let us know if you have any questions along the way. We're always proud to say that we're continuing to onboard MLSs, and several more will be launching DPR in the coming weeks. Now, if you're a member of one of the partner MLSs, when you are logged into your MLS, look for our down payment resource button on eligible listings. You'll see these down payment buttons on agent reports as well as in your client portals. So click it, and we will tell you or your client which programs are available for properties that they like the most. Down Payment Connect is free for members of our MLS partners. If you're an agent and not a member of one of those MLSs, you can subscribe to Down Payment Connect for your own DPA search page and lead gen tools. Loan officers, we have a version for you too, which allows you to control which programs consumers see so you are aligned with the product offerings at your company. Now, if you're asking what is Down Payment Connect, great question. Down Payment Connect allows buyers to complete a program search from your personalized link. This provides you with the opportunity to generate leads by engaging and educating new buyers about the down payment assistance programs in your market. And you can use your Down Payment Connect link on your website, in your email marketing, and across all social media. And just to be clear, you are not buying leads with Down Payment Connect. You're taking advantage of our unique DPA eligibility platform to generate your own leads. And nobody else gets your leads, just you. So we encourage you to get creative and reach more buyers and educate them on these wonderful opportunities. We'd also love for you to join our growing Facebook group, Down Payment Insiders. There, you can join over 13,000 real estate agents, loan officers, housing counselors, and even DPA providers as they all discuss best practices with programs, first-time home buyers, working with lenders, learning from each other, marketing ideas, and so on. You can listen in and learn, or participate in the dialogue and engage with your peers. We've also seen that it's a great place to network and connect with loan officers that offer DPAs in your market. So I'll leave you today with a case study that we believe illustrates just how important DPA info is for realtors and home buyers. Amber was a new agent in Florida. No one was helping her peers understand down payment requirements as many of them began to explore homeownership. So Amber stepped in and learned all about down payment assistance programs and built her business serving those same buyers. Like Amber's clients, DPA customers become customers for life. So tell their story, help them, and they will refer their family members and their friends. In closing, please feel free to reach out to us with any questions. We're here to help you and your clients find the assistance they need. We can be reached at info@downpaymentresource.com. And we ask that you also check out our website. If this is your first time, the link's right up there, downpaymentresource.com. So with that, we greatly appreciate your time today. We are going to be sticking around for a few minutes to answer some questions. Is there anything that the team would either like to answer or just any points that the team would like to make?
Hey, Will, this is Mel. We've had a lot of really, really good questions, and the team has been answering furiously. And people may think of a few things that we want to point out, but I do just want to point out, as usual, we have people that came in late or didn't catch everything or had to leave early. So just know that we will be sharing a copy of this recording along with a copy of the slide deck in a follow-up email after the session. You should expect that in your inbox within the next 48 hours or so. And then we'll also include some additional information like where to sign up for additional sessions, etc. So we just wanted to clarify that we absolutely did record this, and we will be sending that out along with the slides to everyone. And then we have had a lot of really good questions. I don't know if anybody else from the team has anything specific they want to address, but they're still coming in chat and still coming in Q&A. So if anybody else has anything they want to add.
Thank you, Mel. I put up this slide. I saw someone in the Q&A request Amber Bennett's slide, so I went ahead and put it right up for a few seconds. I can certainly see that the Q&A is very active. Do people with ITIN qualify for DPA? We have come across, Brenda, a few programs that have that specifically outlined as a qualification. I don't know the specific number of programs, but we have seen some. Of course, of course. So with respect to trainings that dive into the different programs, this is our quarterly 101 webinar. It's my understanding that with our MLS partners, we also provide some of those trainings as well. But this one, I would say, encompasses many of the details in terms of our research into these programs. And it's an ever-changing webinar as well. So, there might be different types included in any following webinars. So that is a great question. I appreciate that. What is the exact moment the buyer should apply for DPA? Ricardo, that is a wonderful question, and one that we always research as well. And I will tell you that it will vary based on the DPA provider. However, some common trends are there's either a housing counselor or someone within the organization that needs to meet with the buyer first to qualify them. So that's typically before they've even met with a lender. There are some program providers that request that you meet with the lender first, since the lender is the one that obtains all of the information and then forwards it over to the DPA provider. There's a question about marketing materials given that can be personalized. Mel or Tracer or Lori, any context around that?
Um, yeah, I can add really quick. I don't see the question. I'm sorry, I was typing another, but that we do have a
Thank
marketing
you.
resources. We do have marketing resources available. We have some personalized or flyers that you can personalize with your information and your down payment connect link. Those marketing resources are available for our MLS customers. So if you're an agent and you are a member of one of our MLS partners, you have all of our tools and resources for free. So you have access to our marketing resources, and then also our Down Payment Connect subscribers. They have access to marketing resources as well, but we certainly do. We have personalizable, let's see if I can spit that word out, flyers. We have graphics for social media. We have graphics that you can use on your website, email signature, etc. So yes, plenty of personalizable stuff.
Thank you, Mel. Let's see here. After my buyer completes the DPA classes and all the process, how can we connect with the lender to make sure this happens? Jose, that is a great question. I would say that's probably something where when you're in the process of either getting qualified for the DPA, you may be having those conversations at the same time. If there's anyone within your brokerage that has lenders that they've previously worked with, or even when you're working with the DPA provider, if they don't have a requirement for who to work with, they typically have lenders that they commonly work with that understand the program. So I would say probably happens perhaps at the same time, since you want to get that loan approval process started as well. The team, is there anything that you like, any common themes that you may have seen that maybe weren't addressed during the webinar?
Well, for me, I will just say We often get, and I know that you covered this maybe a little in the presentation. We do often get
Mhm.
people want to know about lenders that do DPA. And forgive me if I'm repeating. I've been typing away over here. But
Thank you.
it's a great question. We get it all the time. As a matter of fact, finding a lender that does DPA is the number one question that we get from real estate agents. So there's a couple of different ways to go about that. We When you are using down payment resource, when you're searching for programs or you're using one of our tools, you will notice that we include links to program provider approved lenders. So most program providers are going to have a list of approved lenders that they work with, and we provide links to that information. I saw Tammy ask in chat, and I think Tracy's typing an answer or reply now, but I realize that that may look just like a big list of lenders that you're unfamiliar with. So a good question is, where do you start? And my personal advice is to ask your lender as an agent. If you have a loan officer that you work with or a lender you work with regularly, ask them what DPA programs that they provide. What DPA programs do they work with? If you don't have any luck there, check your state housing finance agency. Every state has a housing finance agency. Normally, those have very organized list of approved lenders where you can search in some, I won't say all, but in some cases, you can search geographically. So you can search within your state and find loan officers or lenders that are more centralized to your location. So yeah, I think ask your lender first if they offer any DPA. And like I said, if you don't have luck there, then maybe check with your state HFA, or again, we do provide links in the programs, the search results that for each program provider and who their approved lenders are. But it's a great question. It comes up a lot. So I just thought it was worth addressing.
Thank you, Mel. I appreciate that. There was one here regarding restrictions for refinancing or selling. I will say that those are that typically is a trigger for repayment. However, there are programs that allow for refinancing of the first mortgage. However, caveat being that it's typically just to adjust the rate and the term. Any cash out taken may trigger repayment, but there are some programs that if that cash is being used to be put back into renovations, maybe slim, but we have seen some programs where they will allow that. Selling any change of occupancy is also a common trigger for repayment of these programs within a specific time frame. I'll say that if they're forgiven, so long as it's not done within a specific time frame afterwards, once the loan is forgiven, well then, um, they may be able to. Angela asked the question, what are your thoughts and experiences from agents who frown upon down payment assistance and won't make their clients aware of these programs? Some of it is from what we've gathered from peers, just a misunderstanding of the programs, perhaps one negative experience, kind of snowballed into not being willing to work with these programs. I will say it's a perfect time to pitch our myth busting webinar that I believe will happen next month, where we address some of these concerns and some of these myths that continue to come up when discussing down payment assistance programs. So thank you for that question.
Hey, Will, I'm going to jump in again if you don't mind,
Yes.
but we
No, 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 please.
had we had a question about if there were any programs available for people with disabilities, and then I've seen a couple of programs in here, because I know you covered it in the presentation that are incentivized for different kind of professions, et cetera. So I just wanted to address that again. There absolutely are programs that are available specifically for, you know what, I'm actually going to post just last year, and this isn't, I think it was last summer, but we actually did a little bit of data pulling and a little bit of reporting on programs that were available for people with disabilities and then their caregivers. So I'm actually going to post a link in chat to that blog post because it has some information about those programs. Again, that was done. There could be new programs that have been added or things could have changed since then, but just wanted to generalize that and say that yes, there are programs that are incentivized for our community heroes. There are programs that are incentivized for people with disabilities, etc. So those types of things are definitely out there.
Thank you, Mel. Evelyn, any programs for veterans? I believe Mel touched on this. There absolutely are programs for veterans, as mentioned, that can actually be used in conjunction alongside, say, VA loans.
And
Um,
I'll add to that too. Evelyn,
mhm.
we actually did some data on that as well for Veterans Day last year. So I'll post that link to that blog and the chat as well.
Okay, so I am getting some down payment connect questions. Let me see if I can get back to the down payment connect slide.
Well, while you're looking for that, we had a good question in chat. This also comes up quite often as
Mhm.
well. And I think Lori addressed it. But programs can be layered or stacked. And I don't pretend to be an expert here. We have people in our panelists like Keith and Kathy that would probably speak more have a little bit more knowledge behind this, but you can layer programs so your buyers could potentially qualify for more than one DPA and they could potentially use multiple DPAs in a transaction. So it is possible to get additional benefit by qualifying for more than one down payment assistance program.
Thank you, Mel. I have a quick follow-up. There was a question regarding registering for the myth busting webinar. Is there a link that we can put in chat? I know it's accessible through our educational resources tab on our website as well.
Yeah, I can put the link to our education page.
Yes, thank you. Thank you for that.
No problem.
Are there any programs for those who want to live in age-restricted communities? I haven't personally come across one specifically, but I know that there are many programs that, will restrict where a property may be purchased, where the home buyer has to live. I'm wondering, Keith or Kathy, any experience in kind of seeing any of those? I haven't personally seen those myself. Let's see here. Okay, Marilyn, we're gonna put the educational link up in the chat. Thank you for that question. Chris, a copy of the slides will be shared with everyone, but we appreciate you asking. What about MRED?
Well, that's an MLS.
At
And
MLS, I figured.
yep, I actually just replied to Regina in
Oh,
chat.
thank you.
Yeah, Regina, unfortunately, Imrad used to be a partner, but they're not currently, and that was years and years ago. But I mean, we would obviously love to work with them again. So, but they are not currently a partner.
Okay. We really appreciate all of these questions. This is something that, as we mentioned at the start, we really enjoy engaging with everyone here. And we hope that the information here not only will be found useful, but that you will come back again, right? I mean, we're always changing um, the information on these slides. And of course, if you know someone that hasn't yet hopped on one of these webinars, we ask spread the word, let them know to register. This is something that we enjoy doing. So, on behalf of all of us, we just want to thank everyone. We appreciate you being here today, and we cannot wait to see you again at the next webinar. So we hope you all have a wonderful day. Any additional questions that were not answered, please feel free to send them in. But we hope to see you again. Take care.